And we've heard your call to collective action to actually achieve recovery at scale. So your insights actually will be very helpful to contribute to the following panel discussion, which will question the global development finance architecture. So for the next session, we have Mr. José Antonio Ocampo, who will lead the panel discussion. José Antonio Ocampo is professor and co-president of the Initiative for Policy Dialogue at Columbia University in New York. And we also have 4 eminent participants joining us from all around the world. So we have Wencai Zhang, Vice President of the Agricultural Development Bank of China. We have Admassu Tadesse, President and CEO of the Eastern and Southern Africa Trade and Development Bank. Alexia Latortue, Managing Director for Corporate Strategy, European Bank for Reconstruction and Development. And Mr. Alfredo Schlarek-Kuruche, Associate Researcher, National Scientific and Technical Research Council, Argentina. So before I give you the floor, I would like to remind our participants that they can continue to send us their questions. Send your questions to our speakers through the platform, the send a message box, and they will be very happy to answer to your questions at the end of the session. José Antonio, over to you. The floor is yours. Hello. José Antonio, maybe you are on mute. Are you?
No, I am not mute.
Oh, you're good then. We hear you now. Very good.
Okay.
Over to you.
Okay, very good. Okay, very good. Thank you very much, Madam Master of Ceremonies. Let me start by welcoming, giving good morning, good afternoon, or good evening to all the members of our panel. And at the same time, let me introduce some of the issues that I think we should address here, based on the paper, the academic paper I did for this project. The first issue is how development banks support the realization of the global development objectives, which are again summarized in the SDGs. So in that regard, I think there are 2 crucial issues. First of all, due to the crisis that we're undergoing, what is the counter-cyclical role? How are they going to support economies during the crisis, and particularly how are going to support recovery for the recovery of the economic activity? And the second is the long-term issues that Lord Nicholas Stern has pointed out, which are also important by themselves. Let me say, of course, the issue of reducing inequalities, international inequalities, regional inequalities, social inequalities within countries is, of course, a major objective of development banks. But we underscore in our paper 2 additional issues, which is supporting innovation in developing countries as a major topic for the agenda. And the second is climate change mitigation and adaptation as an additional objective on which there is a significant investment. And the second issue, the second broad issue, is how development banks work as a system. And is the World Bank, the regional development banks, the inter-regional development banks, like the Islamic Development Bank and now the New Development Bank, the sub-regional banks and the national development banks, and in some cases, the subnational development banks. So how they can work as a system to achieve these objectives that we have underscored. Okay, with those very broad initial remarks, then let's start with the first round, which will be actually about what development banks do in their mandates to support the countries and regions and sectors to which they are mandated to support. So I give the floor, first of all, to Mr. Admassu Tadesse.
Thank you, Jose. Good afternoon, good morning, everybody. Pleasure to be here on this panel. Very quickly, Jose, I think just for everybody's background, TDB stands for Trade and Development Bank. So as many would expect, trade is a big part of what we do. And of course, trade has a very strong link with private sector importing and exporting. But of course, we do quite a bit of project finance, enterprise finance, and of course, multi-sectoral in coverage. So we do agriculture, we do industry, we do infrastructure. So we're quite broad in our coverage of various types of sectors, and of course, the private sector tends to be across multiple sectors. So of course, many of the SDGs, as you would know, cover all these sectors. Of course, there's a number of cross-cutting SDGs as well around partnerships. Partnerships are a very strong part of how we are positioned and how we've been growing. We, unlike the classical sovereign owned multilaterals, we have pension funds, we have insurance companies, we have other specialist FIs in our shareholding as TDB. And so we have a hybrid structure, and we actually crowd in a lot of institutional capital into the bank. So we also help to bring in more financing into the various development sectors that we're active in. And of course, it's enabled us to grow very sharply over the years. In terms of our products and services, we also have quite a scope. We do very short-term trade finance type of deals. Of course, that would involve letters of credit, confirming, refinancing them. We do ECA finance. And then, of course, we do a lot of SME and corporate lending that goes anywhere between 3 to 7 years, in some cases longer, depending on the situation. And then, of course, on the longer end, we do also infrastructure. We do a great deal of renewable energy. We're very proud that some 3/4 of our power sector portfolio is actually renewable in nature. It's wind, it's mini hydro, one of the river types. And of course, we're doing solar as well, and we're going to be doing geothermal. So we have a very good footprint in the renewable space. So we're quite a diversified DFI, and we cover around 22 countries, all the way from Mozambique and Mauritius down in the south, all the way up to Egypt and all the countries in between. And so, yeah, we've had a great run. We've been growing at roughly 20% per annum for almost a decade. And so we've had a good run. Of course, Africa's been growing a great deal, as many of you will know. It's been a very strong growth trajectory of the past decade. And of course, we've been very active during that time. So I'll say maybe a little bit more down the line in the panel discussion around what we've been doing around COVID, and maybe some specific pointers around how we think the Build Back Better agenda can get some good firepower behind it.
Actually, since we have a few minutes intervention, why don't you say, what are you doing in the COVID crisis?
Well, thank you, Jose. Well, you know, one of the first things we were very quick to do is just to make sure that we ourselves wouldn't get caught up too much in the crisis. So we made sure that we did all the precautions and made sure that the bank didn't close down. Of course, everybody went into remote working methods, but what we did is we made sure that we stayed open and we continued to do all of our operations. As you can imagine, trade took quite a bit of a hit with what was happening with the lockdowns, and of course with the fall in demand. But at the same time, there was continued demand in countries because we do a lot of importation of essential commodities that are critical to many countries. We do importation of fertilizer, food, medicines. We also sometimes help with basic energy requirements such as fuel. And so we just had to make sure that as the world slowed down and as logistics got difficult, we made sure that we continued to stay in operation. And one of the very interesting things we did, Jose, you talked about innovation. We actually realized that it was very difficult to transact business in the normal way because there was long lead times involved with using the typical courier services that you would to send documentation around and to go through some of the due diligence that you would typically need to do. And what we ended up doing is we started to introduce some exciting technology, blockchain in particular, and we were able to convince a number of our counterparties to start using that kind of distributed ledger technology in order to exchange information and documentation and to start getting onto the virtual digital type signatures so that we can do business. So that was on the innovation side, but we did make sure that a lot of our existing clients continued to enjoy our services, and we made sure we didn't pull the plug on any of the commitments that we had. And at the same time, we reprioritized a lot of our facilities, and we made it very clear to various clients, both corporates and sovereigns, that if they needed to make a very quick application, we had an accelerated process, and we would, of course, increase credit to sectors like the medical sector, so that if there was any particular need to boost importation of equipment and primary healthcare facilities, as well as hospitals, we were going to provide that. Of course, we had quite a few of them already in the pipeline pre-COVID. And so when COVID came, a number of sovereigns really wanted us to push and accelerate. And we did that. And we also gave comfort to many partners that we wouldn't be, slowing down or exiting, because quite a few banks did actually do that.
Yeah. Well, thank you very much, Admassu. I give the floor now to Madame Alexia Latortue.
Great. Thank you so much, Jose, and hello to everybody. So, we absolutely at the EBRD, Jose, believe that we have a central role to play and a contribution to make to the Sustainable Development Goals and the global agenda. EBRD was created in 1991 at a very unique time in Europe's history, with the collapse of communism and the fall of the Berlin Wall. And at the outset, the EBRD had a very specific and distinct mandate, and that's to help the ex-Soviet republics transition to become market economies and to promote private and entrepreneurial initiative. So the private sector and private sector development is sort of baked into the DNA of the EBRD. And indeed, over the years, about 70 to 80% of our business in any year is in the private sector. Now, to be frank, however, if we look at the predecessor goals of the SDGs, the Millennium Development Goals, we were not quite sure exactly how to contribute to them, how we were relevant to them, because we don't work so much in the social sectors. But then in 2016, based on our experience working in countries, based on the experience of a global financial crisis, several regional crises, and of course the academic literature, we actually revised how we think about our transition mandate. We absolutely remained focused on helping countries transition to become market economies, but not any kind of market economy. So we learned that we really need market economies to display certain qualities. And we highlighted 6 qualities: competitive, integrated, resilient, green, inclusive, and well-governed. And as I said, these 6 qualities, I hope you heard how well they align with the Sustainable Development Goals. So all of a sudden, we found ourselves absolutely resonating with the global agenda and thinking that we had a strong contribution to make, whether it's around decent work and economic growth, around sustainable cities, around gender equality, around industry, innovation, and infrastructure. We saw ourselves very much part of this global movement. And then, of course, with the private sector mandate, very aligned with the Addis Ababa Action Agenda, that we need not only domestic resources, not only official development assistance, but very much we need private sector financing to be able to achieve the goals. And so maybe a few examples of then how we seek to help countries achieve the SDGs. So first of all, though we're very private sector focused, we do combine investments also with policy engagement and technical assistance. And actually, if you look at the financing for development, the importance of policy work is underlined quite strongly. And we are also able to do some selective work in the public sector, particularly to unlock opportunities for private financing to come in, to bring in the discipline and the efficiency of a market approach, and also to help countries push through the important reforms that are needed. With our commercial focus, we really make sure that we're supporting markets, not supplanting markets. And then we have a deep sectoral focus and knowledge around financial institutions, around sustainable infrastructure, around industry, commerce, agribusiness, but we combine that with a deep local presence. We have over 1,000 people, over 58 offices in the 38 countries that we work in. And this allows us to develop that trusted relationship with governments for the policy work that is so critical. It allows us to meet and identify and nurture relationships with clients, including local clients, not just the multinationals, including in secondary cities. We have focused quite a bit, green is the topic of the day, I think, on the green agenda. And recently, over 40% of our business has been in the green space. We have a commitment that over more than 50% of our business will be in the green space by 2025, working hard on Paris alignment as well. Linked to resilience, which is one of our transition qualities and I think an important topic with COVID, we also do a lot of work around helping develop local capital markets and the availability of local currency. So about 30 to 40% of what we do, José, is in local currency, including trying to incentivize SMEs to borrow in local currency. On the point of SMEs, we prioritize them a lot, and about 1/3 of our projects are with SMEs, either directly or indirectly, both financing and advisory. You mentioned equality in your opening. We do a lot of work around equality of opportunity. So working with underserved groups, women, youth, people living in remote areas, to make sure they have access to employment, to skills, to finance, to basic services, and to infrastructure. And so over the years, EBRD, I think, has been really able to respond to these momentous events, whether it was the fall of communism at the outset of our history, more recently the global financial crisis, the Arab Spring, where we started working in North Africa and the Middle East as well. So we think we're agile, but COVID, of course, has tested our agility. Just going to the second part of your question, it's tested it. We think we've done all right so far, but frankly, we cannot be complacent, and the worst may be yet to come. We don't know. Like the other MDBs, like the other development banks, we move quickly. You talked about the counter-cyclical role of development banks in your paper. I think all of us came in quickly and increased, frankly, the volume of business that we did in our countries. For the EBRD, we've never done so much business. In September, as of end of September, 7.9 billion euros, compared to in 2019, and end of September, 5.8 billion euros. So that's good, but we need, I'll wrap up very quickly, but we need to lift our heads. This is perhaps my last point. We need to lift our heads up from quantity and also look at quality. And so the green agenda, the equality agenda, the digital agenda, managing the relationship between markets and the state, the need that many companies have now for equity, not just debt, because some of them are worried about being over leveraged, and how to really respond to Nick's point about the importance of infrastructure that is built in a low carbon way, I think are some of the challenges as we look towards the recovery.
Well, thank you very much, Alexia. Let me underscore in particular your point about the quality of market economies as a concept that I think very well permeates or should permeate the whole development banking system. Let me now give the floor to Mr. Wencai Zhang for his remarks.
Now it's my turn. Sorry. Yeah.
Yes.
Okay. Thank you, José. Dear colleagues, and I think it's really a great honor for me to attend this conference, and I want to thank organizers for inviting me for this very important event. And let me give you a very briefly introduction about how the Agricultural Development Bank China has supported the development agenda. And I think, as you may know, the ADBC, the Agricultural Development China, was set up in 1994, and is the only public development banks in China that specialize in supporting development of agricultural rural areas. Since the establishment, the bank has a focus on the key areas and the weak links in the agriculture and the rural areas, including poverty reduction, food security, agricultural modernization, and rural infrastructure building. As in face of the COVID-19 outbreak, the bank promptly opened emergency and the green channel for the loan application approval to fight against the epidemic. And the work and the production, and our support include the provide financial support to particularly to the SME, small medium enterprises, and also the micro enterprises for their operations. Going back to normal operations, I think we have provide a lot of lending support to those enterprises. At the end of the third quarter this year, the bank total assets stood at 7.67 trillion Chinese yuan, with outstanding loan balance of 6.09 trillion Chinese yuan. In the first 3 quarters, a total of 1.52 trillion Chinese yuan in loans was disbursed by the bank to support agriculture. So this is a general picture about our operation until now this year. I think the bank's major business covers the following areas. The first, the bank is fully committed to promoting poverty reduction in rural areas. The bank vigorously supports the infrastructure construction, development of agro-industries, and relocation of the poor population in a poor stricken area, and help improve the public services such as education and health care in those areas. Since 2015, the bank has issued a total of 2.55 trillion Chinese yuan in poverty alleviation loans, with a total loan balance of 1.5 trillion Chinese yuan for the poverty alleviation. And secondly, the bank also goes all out to serve the national food security. The bank implements national policy on the grain purchase and reserve, actively support policy-based purchase and reserve, as well as a market-oriented purchase of grains, stabilizes the food prices and safeguard the farmers' income from growing the grains. In the meantime, ADBC, our bank implements our bank also support the construction of high standard farmland and developing agricultural technologies to enhance the grain production capacity. I think at the end of the third quarter, the bank's outstanding balance of loan for grain, cotton, and edible oil stood at 1.8 trillion Chinese yuan. Third, the bank also actively supports rural infrastructure development. In recent years, we very much focus on the support for the transportation, water conservancy, urbanization, and the living environment in rural areas. And the bank actively supports rural infrastructure development and improving the farmers' production and living standard, living conditions. At present, the balance of loan for infrastructure construction is about 3.3 trillion Chinese yuan. And fourth, the bank vigorously supports the development of the rural, small and micro enterprises. In the first 3 quarters this year, the bank provided loans of $13.2 billion, particularly to over 4,000 small and micro-sized enterprises. And the fifth, the bank also puts a special emphasis on promoting ecological civilization and environmental protection. The bank actively practices the concept of green development, pay a lot of attention to environmental social risk management of project, particularly develops a green finance, promotes energy conservation and emission reduction, environmental protection, and sustainable development. The bank has altogether issued green bonds. In recent years, we issue a lot of green bonds with a total value of 20 billion Chinese yuan, with a green credit balance of more than 800 billion Chinese yuan, supporting more than 3,800 green projects. Moreover, the bank also vigorously supports the conservation of Yangtze River, as well as the preservation of Yellow River Basin. In addition, the bank also actively conducts international business and carry out the international cooperations and exchanges, providing enterprises with financial services such as international settlement and trade finance. So far, we have established a correspondent banking network in more than 60 countries and regions across the world to facilitate the import-export agricultural products and the going of global of the agriculture-related enterprises. So those are the very general description of what the Agricultural Development of China has been doing over the years. Thank you, Jose. Yeah, I hope I addressed your question.
Yeah. Thank you very much, Wencai. Let me perhaps underscore two issues that have come across the first three interventions: the support to small firms, so financial inclusion, let's say, and the second, the green agenda. And this last point you made about the correspondence banks in 60 countries is something interesting for our second round also, about how you cooperate with the other banks. Now, with that, give me the floor now to Alfredo Schlarek for his remarks.
So thank you, Jose Antonio. It's a real pleasure to be joining you here. And what I'm going to say is part of a research paper that has been produced in the context of this Finance in Common Summit. So I invite you all, if you have more questions, to check the webpage. The working paper is there. So the main message that we have in this working paper is that national development banks and multilateral development banks, they have to consider foreign exchange and balance of payment crisis risks if they really want to achieve the SDGs objectives and even thinking about the COVID response. So concretely, what we analyze is when multilateral development banks are lending, let's say, to a national development bank or to the Ministry of Finance directly in US dollar or hard currency. These national development banks will do on lending with these funds to different investment projects. And investment projects, they may be export enhancing investment projects. That means that they generate US dollars for this local economy. For example, building a port or developing export agriculture. Or they could also be domestic-oriented investment projects. And in this case, they are not generating hard currency. And an example would be, for example, a solar farm or a sewage system. So clearly here, there is a currency mismatch between this loan from the multilateral development banks in US dollars and the domestic-oriented investment projects. That's not the case when these projects are export enhancing. So what this means is that in order to pay back this US loan from the multilateral development bank, the National Development Bank or even the domestic-oriented investment projects would need to access the foreign exchange market in the local domestic market to pay back that loan in US dollar. So clearly here we have exchange rate risks and even balance of payment crisis risk. What I mean with balance of payment crisis risk is when there is not enough US dollar in this local economy. Coming from Argentina, we are suffering this right now, but I imagine that many other countries are having similar problems. So the question is that given this foreign exchange risk and balance of payment crisis risk, what is the optimal proportion of domestic-oriented investment projects and export investment projects? Well, the answer to that depends on what is the USD liquidity conditions in these local foreign exchange markets. And here we analyze three different scenarios. One with abundant USD liquidity, another one with normal USD liquidity, and a third one with scarce USD liquidity. I would say that this scarce USD liquidity scenario is what is happening right now in the world after this COVID pandemic. So when we have abundant USD liquidity, I mean, there are no constraints. So really, multilateral development banks and national development banks can freely choose the proportion of domestic-oriented investment projects and export domestic investment projects without considering these FX risks. I would say that this is also the condition that many of the developed countries face. But then if we have, and there probably you could, if you prefer domestic-oriented investment projects, you could just lend to domestic-oriented investment projects. But if you have normal situation, then you need to consider how this decision about the optimal proportion of different investment projects affect the FX market. But you don't need to worry about balance of payment problems. Here, the optimal behavior would be to lend a certain proportion to export investment projects in order to increase the future supply of USD and avoid large depreciations. In the case you have a scarce FX liquidity, then you really are bound by this FX market and balance of payment constraints. And here it's even more important to lend to export investment projects in order to increase the supply of USD liquidity. So thanks.
Very much, Alfredo. You point out a basic problem, which actually maybe in your second round, you should probably talk about how you can reduce this currency risk through the actions of cooperation of multilateral development banks. Well, let me then go into the second round, in which we should talk about the working of development banks as a system, how they can cooperate among each other in order to achieve these development objectives. Since we have, I guess, spend a bit more time that we programmed in the first round, let's try to do this in 4 minutes each in the second round. So I'll give the floor first to Alexia.
Great, thank you. I think you're exactly right, Jose Antonio. It's critical for us to work as a system to meet the dual challenge of crisis response, but also building back better. And I think there's a good foundation that the development banks already have in terms of collaboration. And for the EBRD, it's quite clear that the range and the quality of the partnerships that we have are a key determinant to our ability to actually deliver systemic impact. So to be brief, since we're a bit tight on time, let me just share with you 5 ideas. The first one is we're a very diverse landscape, but within that diversity, we need, I believe, a level playing field around common standards. And the G20 EPG report talked about this. Policy coherence, one voice in how we speak with national authorities, pricing policies that don't crowd out the private sector, but crowds in the private sector. Also common standards around environmental, social, and governance issues. So welcome diversity around common standards, idea number 1. Idea number 2 is really leveraging our complementarities. And here I think it's important to note that our diversity is our strength, and we are not perfect substitutes for each other. I think Nick was speaking about this too. If you look at the wide-ranging SDG agenda, no one institution can be the expert on all the range of issues. And so truly understanding what our strengths are so that we can then sort of leverage our strengths and contribute based on our strengths, I think is really critical. The third idea is really this concept of promoting more equal voice throughout the system. Let me explain this, and Nick again touched on this. You know, I strongly believe that no one country, no one region, frankly, no one development bank has all the wisdom in the world, nor are they, beyond criticism. And so we need to make sure that we have a system that's truly inclusive, where every single actor in the system is able to be heard and is able to influence. My fourth idea is, given the scale of the challenges and opportunities ahead, and the fiscal pressures that many countries are under, we really need to do everything to leverage our collective balance sheets as much as possible. And there's some good experiences that some of the development banks have, for example, in terms of exposure exchanges that creates more space even without capital increases. And so we need to explore those innovations around our balance sheet. Fifthly, I think that we can also find ways of working that are more efficient, including promoting a lead bank concept, where if there's a lead bank that does the due diligence, et cetera, that we can leverage that information gathering and not have to repeat it over and over, which of course creates also efficiencies for our clients. And so my final point will be to say that at the EBRD, of course, we collaborate a lot with the other MDBs. I think with national banks, to be frank, it can be sometimes a bit more difficult. So maybe we'll learn through this event. When a national bank has a clear commercial mandate, we can collaborate very easily. For example, with the Lithuanian National Promotional Bank, VIPA, where since 2017, we've been doing a lot of work on energy efficiency for residential buildings. But when we don't have that alignment around the commercial orientation, it can be harder to find concrete opportunities to collaborate. Thank you.
Well, thank you very much for that very good collection of ideas about collaboration. Let me actually point out one little thing. I think the complementarities of development banks are good, but the competition among them is also good for countries.
Yes.
When I was finance minister of my country, Colombia, I said it's a great pleasure, a great advantage, actually, that Colombia can actually have access to 3 multilateral banks. You know, the World Bank, the Inter-American Development Bank, and the Development Bank of Latin America. So it was actually good, and putting them to compete among each other was actually good.
And if I may quickly, I think your point is really important. When we talk about the system, we have to take a client lens to thinking about what we need from the system. It can't just be about us. It needs to be that client lens.
Yeah, very good. So let me give now the floor to Wencai Zhang for his comments.
Okay, thank you, Chairman. I think, I think for the futures, I think given the daunting challenges for the global development agenda, I think we really should be committed to the multilateral cooperation, multilateralism. As a colleague mentioned, we needed to think how we can really further improve the coordination, cooperations among all the important players, including the multilateral development bank, global level, regional level, and also national development banks. And also, of course, we have other important players like private sector, among others. So I think we needed to really work out appropriate mechanisms, right, for them to work together and to deal with the challenges at national level, at regional level, and also at global level. I do see this complementarity so among those players, and global bank, they have their own advantage. Regional bank, global bank, they know, they have a better knowledge about global economic situation, member countries' situation. They have better knowledge about global practice. And of course, regional bank, they know better about the regional situation. A national bank, they certainly know better about countries' specific circumstances. So I think they all have their respective comparative advantages. So we do need to explore, right, the way of this complementarity among those important players. I think second point I want to make is that in terms of development financing, this is an old topic, but also very challenging one still. I think we don't have enough money, right? Development resources for meeting the needs of the global development agenda. So I think we should continue to explore, right, financial resources for the development. I think, of course, ODA will continue to play a very important role, right, in the coming years. And I think developing economy should also, make more contributions. Of course, emerging economy, developing country can also make their contribution based on their capacities. I think here, one thing I think is important is about the private sector, how we catalyze more private sector capital, private sector money, right, in the coming days. And we have been talking about this for some years. I think how we can mobilize more private sector money for their participation. This is still a very tough issue for many development banks. And I think how we also help the developing country design and implement more PPP projects in the coming days. This is something I think still a very important issue. Thirdly, I think I want to say that also we needed to see how we can help our developing members, right, to develop their local currency bond market, so that they can also tap their local financial resources. And I feel these days the MDB, can also have a better use of their balance sheet and issue more bonds, capital market, including the more issue of the local currency bond in the developing member countries. So, of course, other development banks at the national level, regional levels, the global level, they all can mobilize more resources. And so I think this is something I think we need to really think how we can have develop a more innovative mechanism to explore more resources for the development agenda. Secondly, I think in addition to resources, we also need to think how we make sure transfer more technology and scale and to the developing countries. We have done a lot for the transfer of financial resources, but we have not done enough for the transfer of technology and skills and capacity and technical assistance. So I feel that this area is really something we have not done enough. So I hope that in the coming days, we all work together to try to promote more transfer of scale, technology, including the digital, this technology. And also, I think we also needed to do maybe we also need to work together at the project level, through co-financing together. We can also work together maybe for put money in together to support one project maybe in one developing countries together. I think I mentioned about my bank's cooperation with other correspondent bank in other countries. So I think we can do together with other banks to support the trade, support investment between the country, among countries. So I feel that there are many things to do together. I think even the National Development Bank, policy bank, they can work with MDB to do the project in one country or in another countries. So there's many ways of doing this kind of co-financing together. So maybe I should stop here. Thank you.
Well, thank you very much for your remarks. Let me underscore also the issue of the private sector and how you link, which is a point that has come out in several of the interventions, and the role that you have, as well as the EBRD and other banks to support or to leverage actually private sector activity as a fundamental issue for development banks. Then now give the floor to Alfredo.
So thank you, Jose Antonio. So I really think that the cooperation between multilateral development banks, national development banks, and even sub-regional development bank is really, really important. But as I said, it's really important to consider this foreign exchange and balance of payment crisis risks. Sometimes I hear that, well, why don't you just hedge these currency risks? But for developing countries, these hedging markets may not even exist. And if they exist, they are very, very expensive. So that is not like a very good option. I would say that the best option is that you make sure that you finance high return export investment projects, and then of course you can finance domestic oriented investment projects. But in that case, I think it's really important that multilateral development banks reduce the interest rate that they are charging these national development banks. In that sense, you will reduce the future demand of US dollars to pay back these loans. And also, it's very important to increase the refinancing of these loans. So in a sense, it's giving more time to pay back those US dollars. That's really, really important. And finally, let me say, I also believe it's very important, as Mr. Zhang said, to develop local currency markets. Some of the risks or problems that I see there is that many times to do these investment projects, you need to buy imported goods. Like, for example, if you build a solar farm, well, you will have to buy these capital goods from Europe, China, or the US, and then you need US dollars. So that is a key problem that I see there. And I think that we need to think more about these issues and come up with innovative ways of financing and cooperating between these banks.
Well, thank you very much, Alfredo. Very important comments on this link of the probably local banks and national currency bonds of financing, let's say, as a major issue to support. And let me give now the floor to Admassu for his comments.
Thank you, Jose. I think a lot has been said. I'll just maybe focus on one very important area. I think when we talk about how can development banks work better as a system, as you put the question, it obviously means how do we go beyond just transactional collaboration, as is often the case. The question really is how does one build more systematic ways of collaborating? And we've been very happy to be part of this IDFC club that was created about a decade ago. It's a club of about 26 or so development banks that really have a shared commitment and similar philosophy. And we've been working very closely as a club to push a number of strategic initiatives, certainly in the green energy space, but also ensuring collaboration within members. And so we've worked very closely with AFD and, of course, KfW. This particular year, actually, when COVID hit, members reached out to one another and actually looked to scale up capacity to one another, depending on the material conditions of each DFI. So, of course, as we heard from Alfredo, if you happen to be in the developing world and you are not a global multilateral, the dollar access can sometimes become an issue in terms of cost, or it can even sometimes become a little bit difficult if risk turns off and you typically issue Euro bonds. You can have issues. So I think that the development banks within some of these clubs have really begun to reach out to one another. I think we've always had collaboration. I think the question really is how can they work better together in a more systematic way. A fascinating thing that we managed to do with a number of partners is to actually sign what we call risk participation agreements. That basically gives you a commitment by, one development bank would give another development bank a commitment to follow the other into a deal. So we of course, being trade orientated among other things, signed these types of agreements, risk participation agreements, with about 5 different development banks. And they said to us, look, you're closer to the ground, you're active in that neighborhood, COVID is here, people are not traveling. We will throw our weight behind you. You go do a deal, and we will take 20% of the deal that you do. So we went out into the market and started underwriting larger deals, much larger deals, with the benefit of having that risk already distributed, so we don't have the concentration problem. So we managed to bring in, for instance, the African Development Bank, the CDC of the UK. We brought in the OPEC fund out of Vienna. We brought in Badia out of Khartoum. And between these banks, we were able to scale up our underwriting capacity by almost $500 million. And we now have other partners willing to do that. So that's another way of really strengthening partnerships, because the collaboration is there. The problem sometimes is efficiency. When we talk about scaling up, we also often talk about speeding up, because I think development banks, one of their weaknesses, as the private sector will always tell us, is you're great partners to have, but you don't move fast enough. And opportunities and constraints are very time sensitive. And so there's a huge premium on turnaround time. So having these types of risk participation agreements and smart co-financing arrangements where DFIs can move fairly quickly together so that they can address the problem in good time. Of course, synergizing is another area of the partnership, I think, that requires a deeper relationship. And we've managed to convince a number of development banks to actually strengthen our risk capital position because we're quite leveraged. Unlike many DFIs, we almost leveraged 1 to 4. We're, of course, quite commercial, so we end up reaching out more, and we're able to achieve that leverage. But of course, you get constrained on the risk capital side. And even though the sovereigns have been investing in increasing our capital, of course, when many of your shareholders happen to be from the developing world, there are, of course, constraints there. So this is where also we've seen development banks actually from the north, from the OECD world, step up and actually not just provide typical funding or just do risk participations, but actually come in on the equity side as well. And so we've had the benefit of several development banks coming in that way, and that's been very welcome. I don't know if I've exceeded my time. I was going to say 1 or 2 other things, but I think I'll leave it at that for now.
Yeah, thank you very much. Yes, unfortunately, time is very short. I now give the floor to our Master of Ceremony, Asha, to maybe I think we have time for maybe a couple of questions from the audience.
Yes, you have less than 10 minutes left for this session, and we have a couple of questions here coming from everywhere. So probably I will take a first question here. Do you think that private sector could efficiently be provided with public grants to produce more SDGs in the course of their investments? I think that could be a question for Alexia, maybe. Yeah.
Sure, I'm happy to start very quickly. Absolutely. So we've been doing more and more of what we call blending. So using a private sector loan, for example, blended with donor resources that come from various countries. And what this allows us to do is it allows us to push the frontier of what markets can do. Because whether it's trying to reach out to a new client segment, to do something that's innovative, working with a new technology, when we were first working on energy efficiency, if the private sector, if the financial system is not yet willing to do something, that blending can provide the demonstration of what is possible with the idea that over time, indeed, the private sector takes it over. So it can be a very efficient use of donor resources.
Right. Another question here from Gertrude Storm. So under the assumption that governments will implement the SDGs and the climate objectives effectively and timely, how could the current financial architecture contribute? Is it an integrated approach to risk assessment and risk management in relation to the major global environmental issues? Is it a possibility? Anyone can jump in. Feel free.
I could say something just to be a little bit controversial about it. I mean, of course, and
we like that. We like controversy. Go ahead.
Good. There is no doubt climate change is a major issue. But again, I mean, most of these wind farms and solar farms are imported goods. And they are not generating US dollars for these countries. They have this, of course, the climate benefit, but are not generating US dollars. And so we have this problem, So I think, again, that's the importance of our research paper, that because we want to invest in these solar farms, it's really important that multilateral development banks are financing really long term to give countries a lot of time to pay back those US dollars.
Thank you for sharing. Another question here, maybe for Admassu. So what else do you bring as compared to national development banks? I mean, what is the particular added value of regional multilateral banks like yours? Maybe Admassu, a quick word on that one.
Yeah, well, regional development banks have a couple of advantages. One, of course, is it has a diversification benefit. I think anybody that knows the landscape in our industry. Diversification, including in the governance space, is quite important, right? Because decision-making obviously benefits a great deal from having a mix of shareholders. So regional development banks in the African continent, of course, have that ability to have a richer mix, right? And so you can have obviously a more insulated management team, and of course you can source expertise much more broadly beyond just the national borders. But at the same time, of course, you tend to have benefits of not being subject to specific regulations that are domestic. And so you also have that insulation from the domestic treatment of financial institutions. And then, of course, you're able to attract far more partners as a regional development bank, because obviously the character that you have makes you much more attractive, right? So I think these are some of the key aspects of it. But the other thing, of course, is regional development banks tend to be much more open for international investment. So we have shareholders typically from all over the world as TDB, right? We have investors from China, from Denmark, we have them from Austria. And so your positioning as a regional development bank is a little bit more open, and that allows you to attract more resources as well. And then you get the benefit of ratings, because typically if you're a national development bank, your ceiling is a national rating. If you're a regional development bank with all the diversification benefits, of course you get that as well. So these are all very significant benefits.
Thank you, Admassu, for this comprehensive answer. Maybe a couple of minutes left, maybe one last question here. So it is important to embrace common principles to ensure that all PDBs have the shared vision and coordinate their efforts. But when it comes to environmental and social standards, how can we strike a right balance between common shared aspirations and different development priorities as countries are at different stages of development? So that's a bit tricky, but it's a good question. Anyone?
Yeah, okay, if I may.
Go ahead.
So, yeah, I think this is also a kind of a question, we have discussed for some years. Of course, at the global level, particularly for MDBs, they have developed a kind of international standard for environmental, social management, right, for the development project. Of course, at the country level, each country has their own country system, what we call the country system, in terms of the procurement system, environmental, social, system, and other financial management system, among others. So I think for public development bank, right, including regional, global, and national bank, we need to help our client, our project, right, through our project, help our member countries to develop their national country system first, so that so then one day they can also improve their country standards gradually, right? So later they can also meet with the international standards. So I think right now there's so that's the way I see what we face right now. But of course, different countries may at different stage of them, they have a different maybe a level of the environmental social standards. Yeah.
Thank you for sharing. So, José Antonio, we have 2 minutes left. Probably, if you want to wrap up the session, just a few comments before we leave.
Yeah, thank you very much, Asa, for your management of the questions. Let me thank all the panelists for their excellent remarks. Let me perhaps underscore 3 issues. First of all, the issue of objectives, the counter-cyclical. Many of you talk about small and medium-sized enterprises, about green projects, and I want to underscore Mr. Zhang's comment that we're probably doing little on technology transfer, which is my point about innovation as a major objective. The second is working as a system, how to have common objectives, but also how to strengthen the complementarities among the different agents. And I think in several of your comments, you made remarks about the different instruments that you have for that. You have lending, but you have also, as Admassu said, the issue of risk management, let's say, or risk participation, and the issue of equity as a possibility in some cases. And lastly, how to work with national banks and local markets is of course a very important issue. It came, of course, in very strongly in all the interventions because either you are multilateral but you support private sector firms, but if you are national, like the Agricultural Development Bank of China, you have to directly work with the private sector. So how to manage that, and the importance of developing local bond markets, and how banks can help develop local bond markets, and to manage the currency mismatches that were at the center of Alfredo's comments. With this, I think I will conclude and thank again all the panelists for their excellent intervention. Thank you.
Thank you, José Antonio. Thank you to all of you. It was brilliant conversation, and I think that one thing I've noted, it's healthy competition is always good, but complementarity also is relevant. So keep up the good work. Thank you very much. Thank you to all of you. So
thank you very much.
We're now reaching the end of the day. So to close these 2 days of fruitful discussions, so I have on stage, who joined me just during the Q&A session, one of the main initiators of this research conference. So I'm talking about Thomas Melonio. So Thomas is the Executive Director of the Innovation, Research and Knowledge Department at the Agence Française de Développement, the AFD. So Thomas, it's great to have you here.
Good afternoon, Asha.
Yeah, so you have been at, really in the forefront of the development of this research conference and the research program on the public development banks. So lots have been said. We've been here 2 days, so we've had lots of interesting, exciting discussions and debates. So what would be the key takeaways?
Okay,
many, I guess.
Yeah, maybe too many, so I'll be unfair to many of the panelists, which I thank here. So first, Asha, I would like to not answer your question, but start with thanking the participants of this event. Thank you, of course, for being a perfect master of ceremony. Also thanking the academic partners of this event. So that would be the Peking University, IDRI and FERDI, and namely also thank Régis Marodon, Jajun Shu, and Stephanie Griffiths-Jones for organizing the academic days, which took place last week, and the panels today.
And the brilliant work they've done. Yeah.
Absolutely. So I'd like to thank also our partners, Auditoire, and Matthias, Selina, and all the people here who made this possible, people who translated all these events. It's always very important for the viewers to have a proper translation and make it accessible. And you allow me to warm and thank my dear colleagues at AFD. And lots of people have been working at this event. Elodie, Nicole, Barbara, who is here, Magali, Delphine, also, because without them, nothing would be possible.
I think it's great that you mentioned that. We tend to forget the people. There are so many people behind the scenes that we don't see. Thank you for doing that.
Yeah, we take the light, but there are people behind the scenes. So I'd like to thank them warmly. So maybe now I will eventually answer your question. So what are main facts and takeaways? So among the main facts, so we have learned, and for sure, that there are more than 450 PDBs in the world. As it was mentioned earlier in the conference, we have built together with INSEE and AFD a database which gives information, financial, but also more qualitative information about these public development banks. So please read this database. If there are errors, we are open to corrections. We build that effort with humility. But again, let's count. Do not stop counting. Let's count.
That's the objective, is to create a conversation and chat with all the different stakeholders.
Absolutely. There were many questions asked over the last 2 days, but they are very fair questions. But still, building knowledge about PDBs is very important. We have learned as well that PDBs play a counter-cyclical role, in particular to support SMEs, government, and fight the COVID crisis. It has been really seriously demonstrated by researchers, and we know now that at a time when the private sector might be in difficulties, PDBs can and must play a bigger role. We have learned also that we not only face the COVID crisis, but also a climate crisis. There are numerous crises going on. And public development banks, because they are long-term actors, can provide a lot of climate finance to fight against this crisis. ADBC, it was named in the roundtable just before, alone provides 200 billion of climate finance per year. So it's a huge amount of climate finance brought by PDBs. They represent 10% of investment globally, but probably it's way more for climate finance.
Right, so it's important to highlight that. So, Thomas, I'm tempted to ask, what are the challenges on the research program now?
Yes, we had some good news, which I just listed, but there are also challenges that were raised during the 2 days conference, and let's not avoid these difficult topics. So a few researchers have indicated that while PDBs play a positive role to finance climate, for example, they are not yet all aligned with the Paris Agreement. Sometimes it's a matter of pace, sometimes we're going in the wrong direction, so there's clearly an effort, and the summit of development banks, which will take place in 2 days now, certainly will provide energy and impetus so that PDBs play an even bigger role. It's good and important to finance projects which are good for climate, but let's also clean the rest of the portfolios to make sure that we don't finance coal on the other hand, while we finance renewable on the one hand. So that's something very important. Also, it was mentioned that all banks claim and want to be aligned with the SDGs, but it's difficult to be aligned in a 17-dimension world. So being coherent with the SDGs certainly is an objective, but there is a proliferation of standards, it was said, and certainly we have an effort to make so that all banks can report and monitor their financing along to a more coherent framework. Also earlier it was mentioned that PDBs need better governance, not too politicized. Many of them have proved to be financially sustainable to deliver impacts, but some of them face more difficulties. So it was interesting in an earlier roundtable today to understand the conditions for proper governance of PDBs. And also, we can even expect more of PDBs. It has been said that some lack capital, some lack access to debt at reduced rates, for example, which hinders the capacity of public development banks to expand their activities. So there are still barriers to their activities which have to be dealt with in the coming weeks.
Mainly because of their small size sometimes, that they cannot have access to all those fundings. Or probably, Thomas, now that we've highlighted all these important points, so what is the way forward? How do you see the future?
So there are still open questions which are being raised by such a conference. It was discussed earlier on what private investment can PDBs attract towards SDGs. Clearly, it's an objective that everybody shares, but we don't know exactly how much and how it's going to be operated. Some say that we have to blend finance. Some others say that public development banks need more capital. They can borrow from private markets and loan afterwards. So there are different techniques. It's still slightly unresolved, not only the techniques, but also the magnitude of the effects that we can expect. Also, there are many countries without any PDB, so countries in which private savings cannot be orientated towards investment. Around 30 countries do not have a national development bank, and that's clearly a failure and something that development agencies or banks have to work about, because that's a clear market failure, or globally it's a failure in globalization. And also I was mentioning earlier that we do not necessarily properly and in an homogeneous way monitor the SDGs. So it has been done for climate to establish green taxonomies, typically to describe what the green bond is, but now we don't know exactly what sustainable bonds are. AFD has just emitted a sustainable bond, so we are developing methodologies, but others have other methodologies. So I understand there's a bit of lack of transparency here that we'll have to solve in the coming years. So that's many facts established, challenges identified, and some people said earlier on that PDBs have been too silent and that finance should not be neutral. So what we need is committed finance, vocal finance, transparent finance, and it's basically what will be discussed in 2 days now during the Finance in Commons Summit, where all these development banks will gather in Paris. So again, the debate is launched, and now it's a call for action.
Absolutely. I think it's a great way to finish this session. Thank you, Thomas. It was great. I think it's a great step forward for the AFD, and it was great having you for those concluding remarks. Thank you very much, Thomas. So in the name of the AFD, the Agence Française de Développement, I would like to thank all the contributors to these 2 days of discussions. Thomas just mentioned them. So the academic partners, EBRD, IDRI, and the Peking University, the brilliant researchers and speakers that we've had during the past 2 days, and the audience, of course. Ladies and gentlemen, you have been actively participating and networking during the past 2 days. I think that together we have laid out some of the foundations of a solid reflection about the potential of the PDBs towards a renewed approach to their mandate, governance, instruments, and missions for a sustainable future. This is just the beginning of a global transformational movement which will grow and expand, hopefully, until we achieve, our common objectives. So tomorrow we will start the inaugural edition of the Finance in Common Summit. I will meet you again tomorrow at 3 p.m. for the opening session on the Finance in Common platform. So in the meantime, you can stay on the platform and continue to exchange with your fellow colleagues and other participants. And please remember that you can also download the research papers from the platform and on the AFD website, as well as the replays of the previous shows and today conferences will be available soon. So thank you to all of you for these insightful 2 days together, and see you tomorrow for the Finance in Common Summit. Keep safe and goodbye.